Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company's numbers are singing a sweet song or a cautionary tale. Today we're diving into Goldman Sachs Private Credit Corp's latest report, and let's just say there's some interesting stuff happening with their shares and their payouts. So what's the big news? It looks like Goldman Sachs Private Credit Corp has been busy selling shares. Back in early July of 2025, they sold quite a few Class I shares. The exact number of shares was finalized on July 18th, and it turns out they sold over 13.3 million of these shares. And get this, for these shares, they brought in a whopping 300 million of these shares. And get this, for these shares, they brought in a whopping 330 forward overs done without needing to register with the securities folks, which means they're using special rules for these kinds of sales to big or foreign investors. They did this because the buyers were likely what they call accredited investors or non-US persons, meaning they're either wealthy enough or from outside the US to be considered savvier investors. Now, let's talk about what they're giving back to their investors. In June of 2025, the company decided to pay out distributions. For their Class I shares, they're giving out $0.19 per share. This might not sound like a lot, but when you annualize it, it comes out to a 9.1% yield. That means if you invested $100 today, over the course of a year, you could expect about $9.10 back in distributions, assuming everything stays the same. This payout is scheduled to happen around July 29th, and it'll be in cash, or you can automatically reinvest it to buy more shares if you're part of their plan, $9.10 back in distributions, assuming everything stays the same. This payout is scheduled to happen around July 29th, and it'll be in cash, or you can automatically reinvest it to buy more shares if you're part of their plan. Scroll Class I shares if you're looking at how their investments are actually performing. We can see their total return based on their net asset value, or NAV. This is basically the market value of all their investments minus their liabilities divided by the number of shares. For the month of June, their Class I shares had a total return of 0.58%. C-prompt, or 3 months it was 2.1%, and year to date it's climbed to 4% over a full year. The return was 9%, and since they started operations back in April 2023, it's been a solid 10.4% return. This shows that overall their strategy of buying and managing these private credit assets has been working out pretty well for their investors so far. Speaking of net asset value as of June 35, the company's total net asset value was around $7 billion. And for each Class I share, the NAV was $25.07. Think of this like the book value of each share of the company. It also tells us that the total fair value of each share of the company. It also tells us that the total fair value of all their investments was roughly $9.6 billion. Well, other things that reduce their net worth. Now let's look at how much they're borrowing or their fund leverage. As of June 30th, their fund leverage was 0.4 times. What this means is that for every dollar of net assets they have, they are borrowing about 40 cents. Using borrowed money or leverage can make your returns bigger if things go well, but it also makes your losses bigger if things go badly. So a leverage of 0.4x is relatively modest, suggesting they're not taking on a huge amount of debt risk. Overall, Goldman Sachs Private Credit Corp seems to be operating smoothly, raising significant capital through share sales and providing steady distributions to its investors. Their performance metrics, like the total return and NAV, indicate a healthy growth trajectory since their inception. The moderate leverage level also suggests a prudent approach to managing risk. So what's my take on all this? Goldman Sachs Private Credit Corp is showing itself to be a pretty consistent player in the credit market. They're attracting a lot of investment as seen by the massive share sale, and they're paying out decent yield-driven returns. The key strength here is their ability to generate income that gets passed on to shareholders, and the fact that their net asset value has grown steadily since they started signals good management of their investment as seen by the massive share sale, and they're paying out decent yield-driven returns. The key strength here is their ability, showing a strong ability to execute their strategy. And today's Nvidia economy takes a downturn. The companies they've lent to might struggle to pay them back, which could impact those distributions and the NIV. But based on these numbers alone, particularly that 9% annualized yield and the consistent growth in NAV, they appear to be a solid choice for investors looking for income from the credit space. They are definitely showing a strong ability to generate income that gets passed on to shareholders, and the fact that their net asset value has grown steadily since they started signals good management of their space. Alright, that's our breakdown of Goldman Sachs Private Credit Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more deep dives into the financial world. And hey, if you want to connect with a community of like-minded investors and dive even deeper into these topics, Our Discord channel link is right there in the description. Thanks for watching, and we'll see you in the next video.